Hi all, and thanks for joining us at Framework FX, and today we're going to be looking at the popular YouTube video Simple and Profitable Scalping Strategy from the team at ForexSignals, and we're going to provide our own backtest results and analyse them. But before we do that, if you enjoyed today's video, it would be a great help if you could like it, subscribe and ring that notification bell, because it really does help as we try to grow the channel. So I'm sure you've seen the strategy. It's immensely popular on YouTube and I've come across it many times, so we decided to put it through a thorough backtest and see how it stands up. We'll quickly explain the strategy before showing you what we find. Stay tuned. Okay, so as I briefly mentioned before, this is a strategy provided by ForexSignals on their YouTube channel, and they describe the strategy in far better detail than I could, so I'm going to leave a link to the video in the description, and you should definitely head across there and watch the in-depth explanation, as well as check out the channel because they do some great stuff over there. But as for right now, I'm just going to run you through a basic example so you understand what we're looking for, so you can see what we sort of need. So as you can see on the screen, we've got two charts up here side by side, and that's because this strategy utilises a higher time frame confirmation in an attempt to keep us out of any bad, unnecessary trades and make sure we're only looking for good, high probability setups to improve that win rate and build consistent profits. Okay, so the two time frames that we have up over here are the 5-minute chart and the 1 hour chart. Okay, we also need to put our three exponential moving averages on, and these are the 8, 13 and 21 periods on the 5-minute chart, and then there's just two exponential moving averages on the hour, and that's just the 8 and 21. Okay, so what we're looking for is a push away from and a fan of these exponential moving averages on the 5-minute chart. When we get that, we look at the 1 hour chart, and provided prices above both moving averages here, we're good to continue. Okay, so then we wait for a pullback and a touch of any of the moving averages. We've got one here, as you can clearly see. Okay, so then we're looking to set a buy stop order. Okay, so you find the highest point of the previous 5 candles from the first touch or the trigger bar, and then your order goes 3 points above that high. Okay, right here. Your stop goes 3 points below your trigger bar. Okay, right here. And then your first take profit, or TP1, is up at 1-to-1 risk reward, and that's where we'll bank our first profit. Okay, so now your order is set, and that order is valid until price either triggers the order or price closes below the 21 exponential moving average, in which case we'll remove the order. So let's just run this through a little bit. Okay, nearly there. Okay, and so this order is triggered, and we're either going to run to TP1 or get stopped out. Okay, so let's see. Okay, and there we are now at TP1. So at TP1 we do two things which look to help protect our trade, and they are that we bank half the position, meaning we've already made 0.5R on the trade, and we move our stops to break even. Okay, so now we have 0.5R secured and are running the trade risk free. Okay, so after that, our second target we put at 2 times the risk, so we put that up here. There we go, and now we leave this trade to either fall to break even or to hit TP2. So let's see how that gets on. Okay, and there we are at TP2. So this trade would have just seen us make 1.5R, meaning that if you risked 1%, you'd now have just made 1.5%. And the reason that this works so well is because it filters trades to begin with, okay, with a higher time frame confirmation, keeping you out of bad trades. Then it utilises orders, meaning that the price has to head back in your favour before you even enter the trade. And then lastly, you're looking to protect your profit early. Okay, so all in all, it is a clever strategy. Okay, so let's step across, we'll take a look at the results, and we'll see just how well it tested. Just before we take a look at the results, we run a copy trading surface where you can sign up, and our team's orders are copied straight into your account. It may be of no interest to you whatsoever, but maybe you'd benefit from making money whilst you're learning to trade, or you'd just love to free up some of your own time. Either way, it'd be great if you headed over to frameworkfx.com and checked it out. Okay, so the results are in, and this is what they look like. Now, just to start off, I have to say that this is one of the best strategies that I've tested in a very long time, okay? Meaning no disrespect to the team at ForexSignals, but I was skeptical as to how this strategy would perform, as it is very simple, but honestly, it really did blow me away. So the first thing that we need to look at is obviously the profit right here, plus 128.5%. Now, it's important to say that I tested this over the last 11 months of data, so it's from July 2020 to the first week of May 2021. Okay, and this is based on risking 1% per trade, so 128% over 11 months. And if we take a quick look over here, we have the win rate, about 63%, which is also fantastic, and exactly what we want to see from a good strategy. Is, you know, no strategy is 100%, as you should be well aware of by now in your trading careers. Okay, so let's take a look into this in a bit more depth. So as you can see, the profits were actually quite nicely distributed throughout the months. Okay, not a single losing month, and I think that correlates to the amount of trades taken each month, which are also quite nicely distributed. It's interesting to see that December, which was our weakest performing month, despite still being profitable, did take the fewest trades, okay, suggesting that this strategy works great when a good amount of trades are taken, given a chance for that, you know, edge of 60+% win rate to take effect. Okay, 353 trades overall, which averages about 8 trades a week, I think. So this is a great strategy for someone who maybe trades part-time but can keep an eye on the charts to spot developing trades. But all in all, fantastic stats there. I mean, you can't really complain with 128.5% profit from 11 months using a 1% risk per trade, and you know, it would likely be higher if we added June into that. So that's really exciting. Let's take a look at some of the other data. Okay, if we jump into, let's have a look. Let's take a look at the second most exciting part of this strategy, and yet arguably the most important part of any strategy. And this is really impressive. Right here, we have our max drawdown, and that is running at minus 6.75% for the year. Now that's extraordinary, okay, especially considering the volume of trades the strategy takes and the profits it generates. Having such a low drawdown is, in my opinion, the best part of the strategy. Okay, it means we're taking low risk for high rewards, and you know, that's all you can really ask for from any strategy. Okay, taking a look at what else we have up here, we can see that the strategy took around 60 more long trades than it did short trades, but again, nothing really interesting about that. I'm sure over more trades that would eventually level out, but it shows again how an increase in trades increases profitability, I suppose, as the edge plays out, with long trades taking considerably more profit here than short trades have taken. Okay, so next we can take a look at the days of the week, and again, not a great deal to pick apart on this one. Profits are relatively evenly distributed across the week, which is great, meaning that you can be scanning for opportunities every day and don't have to consider staying out of the market any of the days, you know. So clearly we've got slightly more profit in the first 2 days of the week. It could be because markets are picking a direction to travel after the weekend break and we're just getting involved in those trends, but again, nothing but impressive results on this. A bit of a dip in the middle of the week, maybe markets are flattening a little bit after the early run, but that might just be a coincidence. We probably need more data for that. Okay, so lastly we can take a look at the timings of the trades taken. Just to point out to everyone, we're a UK based company, so we're looking at around 7 AM UK time to start trading. I actually usually trade between about 6 AM and 3 PM, so you'll have to work them times out based on where you're watching this from. But yeah, we can clearly see how profit is largely based around them hours. Okay, the run into and the opening of the London session, and then the crossover period with the London session and the New York session also provide an opportunity. So for me, I'd be looking at this thinking that it's unlikely for me to be trading this 24/7. So I'd be realistic and say that I'll look at results from 6 AM to 3 PM UK time, which is here. And when you look at them results and add them together, it still gives you a pretty impressive 102.5% profit. Okay, so really still quite great, and that means it can be traded without having to worry about being at your computer 24/7. As I said, this is probably a great strategy for someone who can keep an eye on the screens, while maybe working a second job or something else during the day. So all in all, pretty impressive statistics here. Definitely a strategy to consider backtesting yourselves. I would definitely say that. If we move across, let's take a quick look at the visuals over here. 2 seconds, I'll pull them up. And I mean, that equity curve is, simply as good as it gets. It's what all traders want to be seeing. The sheer volume of trades means that we can iron out the losing periods that we have, which are, very brief, might I add, meaning that we're simply pushing up with a nice equity curve, giving us, solid, consistent profitability. If that continued to be as strong as that and pushing up, for a longer time period, you'd see some real results, especially if you consider compounding the profits as well. But that's for another video. The monthly bars just give a good visual of, again, how evenly distributed the profits were over the year, and it's just great to see all that data put in, simply like this, to give an easier understanding of how well the strategy works. You can see on the equity curve the minor pullbacks, especially in the middle of the year, but they're hardly pullbacks, and to be honest, they're more like small consolidations before the next push up, which is exactly what we want to be seeing. So again, everything here just points to a fundamentally strong and profitable long-term strategy. So that's all great to see there. Okay, now as for notes, this is a particularly difficult strategy to give notes on, because it's clearly already heavily backtested and optimized, leaving very few areas for me to consider. The only real note I would consider giving, and it's just my own opinion, I would reduce the order and stop size from 3 points. I just found that to be a little excessive, especially for a scalping strategy. I'd personally look more for maybe 1 point on either end to make sure that price still broke the previous high or low as confirmation. But you've got to remember that if you add 3 points to the top and bottom as you target 2 times your risk, you're asking for an extra 12 points. When really, if you just reduce those down, you could be closer to around 4 points. I didn't really see any signs of price reaching the order, touching it, then reversing to the stop, or get close to the stop, before driving back up. So by reducing these numbers, you could increase profitability by hitting more target prices, or even increasing your target prices to improve risk reward. But they're all things to consider, for yourself when you backtest it. This is a great strategy, guys. Okay, so go away, backtest it, fit it around yourself, fit it around your own trading style, find the results, and if you get as good results as these, then really it's a no-brainer to consider. And so all that's left to say is thanks for joining us. If you've got anything from the video, please consider liking and subscribing, as we have tons more to come just like it. We also run a free Telegram group with general information in, so consider joining that as well. And lastly, as mentioned earlier, if you fancy visiting our website at frameworkfx.com, that would be great. Thanks again, guys, and safe trading.